It looks like the market had a kind of a yawn coming out of these minutes.
Well, 2 or 3 ticks up on the S&P. I mean, any hope that there might be any kind of rate cut in the year is going to get the markets going a little bit. I mean, if you look at the Fed fund futures, there's some hope further out that there might be a rate cut. And Steve seemed to intimate that there were at least a few people who held out that possibility. So to a certain extent, that's positive. But I think the key here is the references to the global growth issues, because that's really what I wanted to hear about. Uncertainty around trade, slower global growth in general, the waning effects of fiscal stimulus. I think that's all important. I think the way the market's been reading this recently, though, a lot of people think the waning effects isn't the way to look at it. It looks like the Chinese are gearing up for fiscal stimulus. It looks like the ECB even might be gearing up for fiscal stimulus. And Tyler, I think that's one of the reasons the market's been holding up so well. Global central banks have their back.
Rick Santeli, your reaction? Some comments about the low level of the yield curve. I mean, the sort of flattening of it.
You know, I think that it's like an open book exam in college. The market's pretty much studying what the Fed's doing and the Fed's studying what the markets are doing. And I truly agree with Bob. There isn't much in here to disagree with, at least from the perspective of those I rub shoulders with every day. That the Fed is going to be patient. They're going to truly monitor data, unlike kind of the white lie of the past. But maybe more importantly, very few down here really know what the next move is going to be. It's split equally between an ease and a tightening, which I think reflects a very kind of floating notion of how the economy will move. Nobody suspected we'd have such an aggressive first quarter, and I think that may have changed some minds that were looking for an ease before a tightening. But I do think that as you look at the economy, there's no doubt that the U.S. and the globe are slowing. So, you know, the Fed's got the perfect seat right now. The dot plots, don't pay attention to them. Pay attention to what Jay Powell says, and what he says is pretty much what was reflected in the first couple of sentences of those minutes.
And Steve Grasso, if I could just go to you quickly on this, is the fact that the 10-year yield is drifting a little bit higher, that isn't this rate cut language in there going to be any kind of headwind for the stock market, or is that just a blip?
Yeah, I mean, I think the yield curve that's the issue right there. So the yield curve has a spread basically of anywhere between 10 basis points to 20 basis points. We're pretty much smack in the middle of that. You know, I believe these Fed minutes did exactly what the market wanted it to do. There was basically a lack of volatility or a lack of volume during the course of the day. The Fed did just enough in backward-looking statements to keep the market sort of steady. Now we look forward to earnings, and we'll see what that lies in. Guidance. We all know that the world is slowing. We all know we're slowing. Let's see what earnings look like. And I think that's the next natural progression for the markets to focus on.
Mr. Liesman?
Yeah, I was just going to point out to what Rick said, that when you read these minutes, the Fed is very aware of what markets have been doing, and the idea that there's been something of a comeback. I think you're right, Rick. It took the foot off of what might have been the accelerator, that maybe there was going to be some kind of leaning towards a move. But if you read the minutes, they're full of the idea that markets have come back pretty smartly. Largely, they think because of the shift in Federal Reserve policy. And so what you have here is a committee that's firmly in the middle. To the extent that anybody's leaning, they're saying, maybe there's an outside chance of a hike, but there is not that outside chance of a cut. There's no group in there that you can see or that's mentioned or explicitly mentioned that looks for a cut later this year.
And did I hear you say, Steve Liesman, that a majority see no hikes this year?
Yeah, that's I think the lead of our minutes here, Tyler. That majority say it's unlikely that the economy is likely to develop in a way where rates do not change at all.
And did I also hear you say that the Fed cited the waning effects from fiscal stimulus, and that they were a little surprised that the economy didn't get more boost from the stimulus that did occur last year? They were a little taken by that. You know,
Tyler, I was going to say a lot. I didn't say it, but now I'm going to say it originally. That the Fed is disappointed by some responses in the economy. They're clearly disappointed by the reaction of inflation. Hasn't reacted the way they wanted it, the way they thought it might. And I think they're disappointed as well in the fiscal stimulus. There's a comment in there that the fiscal stimulus is not providing as much of a boost as they expected.
Rick Santelli, any reaction there? Go ahead.
Yeah, my final word would be, I agree. I thought there'd be more longevity to some of the issues of tax reform and stimulus, but it really does run right into the intersection of all the open trade issues. And I am sure there are participants of the Fed that will acknowledge that, even though it's not underscored in these minutes. Many traders believe that you could get more of a stimulative effect once we know where all the pieces are on the global trade chessboard.
That's what Draghi said today, Rick. It's very important. I mean, he thinks just the threats of all of the tariffs are undermining confidence around the world. He didn't even talk about the tariffs themselves. He actually upped his ante in terms of concern over the effects of the threats of tariffs today in his press conference this morning.
Hey, Steve, did you notice the
Even
Fed?
broken clocks right
the minutes
twice
here,
a day.
Go ahead,
The
Bob.
minutes again address the first quarter weakness issues, which you have talked about for many years now. They said the weakness is not expected to persist, and much of the softness is due to temporary factors. So again, we've been talking about that first quarter phenomenon for a while now.